voice of disruption.
Hey, welcome to Coin DMZ. I and this guy over here, that's William Quigley, we get to talk about what's going on with the whole Bitcoin, cryptocurrency, Ethereum, whatever it is, we get to hang and talk about it every week.
Yep.
First, William, what's the jacket?
The jacket is...
Show's over.
Over.
What is the jacket? What is that?
The jacket is something I wear when I'm cold in LA.
No, you don't. There's no way you would ever wear that in LA. I could see that in the Castro up in San Francisco.
Where are we right now?
We're in Los Angeles.
That's right. So you're wrong. I am wearing it.
There is a purpose why you wear it.
Yeah, there's a purpose why I wear it. When you're at a conference and there's 10,000 people running around and everybody looks the same, it's like if somebody wants to meet you, say, I'm the guy in that awful speckled jacket. And people know it works.
It really does, right?
It works, yeah. I don't know how it took me this long to figure it out. It's like where crazy shit people can find you.
It's interesting because when you go and talk to other finance people, they're always in the same outfit, right? Tie, jacket, looks the same.
Yeah, everybody wears the uniform, right?
That's the uniform, so you don't stand out.
Yeah, you don't stand out, no one can remember. And yeah, so I realized, wow, I should just, like, after I speak, if people want to talk or find me or I'm on the phone, where are you? It's easy to say, just look for someone dressed in a sparkling jacket.
Okay, well, I'm happy you're here. I'm not sure.
Like you, it's like, look for the guy
with the blonde hair.
With the white hair.
Yeah, blonde hair. So I get a call. I got a bunch of calls the other day going, oh no, Bitcoin's crashing. It's crashing. You got to get out. You got to go to Bitcoin Cash.
You're talking 4 years ago.
No.
Oh, 3 years ago.
A couple of days ago.
2 years ago. 6 months ago. 30 days ago.
I'm not kidding, but I got this. It's like, stop.
Right.
What is this almost day trading?
It's crashing and fill in the blank, and that's good or bad?
Well, I think it's on sale. That's
but
the way I
what were
look
the callers asking?
Got to get out of it because Bitcoin is going to cease to exist because everyone's moving to something else.
Right.
Yeah.
I had that conversation 5 years ago, 4 years ago, 3 years ago.
Why can't people learn?
They can't. And by the way, this probably is going to sound crazy to anyone who's listening, because when you hear the word volatility, does that sound like a good, comforting word or a bad word, right? For most people, volatility, we'd put it in the bad column.
Really?
Most people, right? My plane ride was volatile.
Got it. Okay.
My wife is volatile.
You made it sound bad.
Right. It doesn't sound good, right? When it comes to investing, volatility is the most important and most sought after aspect of any asset.
Right.
And that's why we love Bitcoin, because it's volatile. Hey, if you missed the last run up, wait 15 minutes. You can participate in the crash.
And that's exactly what people should have done, but they're operating like on a day trading type attitude.
But what you're talking about is literally the nature of all investing. You remember back in the 90s, the day trading crazies?
I did it.
Right. But most people bought a ton at peaks, sold everything at lows.
That's right.
And this has always been true, right? Warren Buffett once said, it's an amazing thing. Stocks are unlike any other thing consumers want. When it's overpriced, they can't get enough. And when it's on sale, they won't pick it up.
That's right.
That's the nature of it. And Bitcoin and cryptos are no different.
So let's kind of sit back and look on paper. If you could pick a coin that you go, oh, that's it. Looks great on paper. I love it. What would be that? And I hate to say paper with crypto, but you understand.
Oh, right,
Which one would look really good because it's got the numbers behind it, it's got the technology behind it, it's got the acceptance. What would it be?
Right. So I'm not going to give you a coin just yet, because if I'm going to give you a coin, then it's not
Bitcoin.
There's another side of it, which is always the negative, because any asset has a positive and a negative, and that's not helpful to your listeners. What I will say, though, is traits that I would look for in a coin that I would want to buy. First, I would want to buy one that has or facilitates a financial transaction, right? So think about that, audience. facilitates a financial transaction. That means the coin itself is enabling a purchase or sale of something.
It's got acceptance, period.
Right. It's not just acceptance. There's a lot of coins. There's thousands of coins now. Many of these coins are not for essentially doing money transactions.
Some are for data storage, some are...
Some are, yeah, some are for, they give you rewards points, they give you a newsletter. I mean, I don't know, crazy shit. Look, at those may go somewhere. I have no idea how to think about it. Does the coin facilitate a transaction? And more importantly, is the coin focused on a market where those transactions already are taking place? So I would be more wary of something where a guy says to me, one day people may do this or that thing, and if they do this or that thing, then I've got a coin that'll help them. Yeah, that's kind of, who knows, right? But what was the very first thing Bitcoin was used for? The very first thing was gambling. Because there was no way, if you were a US-based person, to use a credit card to engage in online gambling, because that was illegal.
Got it.
So Bitcoin could do it. So the very first thing, no surprise, was, hey, let's use this stuff to gamble because we don't have an intermediary payment company saying no. So now it's branched out way beyond that, of course, and those niche markets aren't going to be where Bitcoin ultimately and all these other cryptos get. But just think about, like, is this enabling an existing transaction that people are already doing? I think that's valuable. Cross-border payments is the obvious example for Bitcoin.
Personally, you see Bitcoin kind of as just a dumb coin.
Well, I would
you don't get excited about it.
Yeah, and let's use, I do call it a dumb coin, but I mean nothing but respect when I say dumb. What I mean is there is not, to those of you who are in the networking industry, I'm talking about like Cisco router networking, there's no intelligence layer that rides on top of Bitcoin. Bitcoin is a, quote, dumb token. You just send back and forth. Ethereum actually is a mini computer that makes decisions about what it's going to do. So an intelligent layer, that's Ethereum. A dumb pipe, you could call that like Bitcoin. Bitcoin still, as a dumb pipe, is very valuable, right? I call it a digital bearer bond. You know, you can take it and you can send it to somebody, and for one reason, digital bearer bond to me is important, and that is because when you think of a bearer bond, you think of something that's worth a lot. So when you're sending $100,000 to somebody, Bitcoin is a terrific way to do it. If you are sending $10 to somebody, it's probably the worst payment method on the planet, right? And I want our audience to understand that Bitcoin is an utter failure as a consumer mass market payment option. And it's a failure for a couple of reasons, but the most important one is it costs too damn much.
Explain that, where it costs too much.
So for you to send a payment, let's call it a Bitcoin from you to another person, there's a greedy guy in the middle, he's called the Bitcoin miner, and these Bitcoin miners love charging fees. And when that network gets congested and it's slowing down, and there's a bunch of people who want to move their payments, but there's not enough kind of rail cars to move them, the miners just do this, and they say,
like OPEC, aren't they?
Yeah, pay up. And so literally you have to pay up. And one of the things I don't like about it.
Give me an idea of fees.
Well, one of the things I don't like about it is they make them up. It's not like PayPal where it's 2.9%. No, they make them up and they charge whatever they want to charge at that point in time. The network, it's like surge pricing on Uber, right? The network's congested. We have paid, for my company, Opskins, we have paid at various times for a $10 transaction, $30.
What?
We paid $30 to move 10. We routinely pay $5. All the time you're paying 50 cents to $1.50.
This is why you actually came out with your own coin.
We came out with the wax token because, one reason was because the fee structure on Bitcoin is preposterous, right? And then people said, well, you could use Ethereum. Yeah, we could use Ethereum. We do use Ethereum, and the fees are very reasonable. The problem with Ethereum is by itself, it doesn't have the smart contract capability. You have to actually program that, right? You have to design it. So the Wax has smart contracts programmed and designed for video game virtual item trading.
I understand, by the way, your company, Opskins, is, like you mentioned last show, it's one of the largest recipients of Bitcoin.
I believe Opskins is the largest e-commerce company in the world for accepting Bitcoin as deposits and cashing out people in Bitcoin. And I'm an investor in a Bitcoin payment processing company. So, and I work with a lot of other Bitcoin payment processors. So I'm always asking, hey, who's your biggest customer? How big are they? And I would love to know if there's somebody bigger than Opskins globally, but I'm not aware.
Around 20 million a month.
Oh, well, we can never say, but I'll just say it is. It's much larger than any other company you can imagine today. Now, by the way, if of course
I'm going to say it. I don't know where my phone's
if
going.
Of course Amazon decided that to go full force, it would be huge.
Well, why wouldn't they?
Well, there's a number of reasons why they wouldn't, and we've talked about this. So Bitcoin, and let's say Bitcoin as opposed to cryptos, but Bitcoin, it's a terrific technology. It's a terrific payment mechanism for a very specific use case.
Well, Overstock does.
Yeah, what do they do?
I don't know, but
2 million, 3 million a month?
I don't know, but I buy stuff.
Maybe they do 5 million a month.
But going back to Opskins then, you're paying an exorbitant amount in fees.
Yes, yes. And we subsidize those fees. So when people want to receive,
they don't see it.
Bitcoin once they've sold their item on our site, they want to receive Bitcoin. We say, great, we'll send you Bitcoin. They would never take it unless they were selling a lot if they had all those fees, so we subsidize them. And we've been subsidizing them in the hope that with SegWit 2x, which was supposedly going to allow the network, the blockchain network, to pack more transactions, the fees would go lower. That got sidelined, so who knows when the fees are going to go down.
So because of these greedy miners,
greedy miners.
That's it.
And I wouldn't even call them greedy.
They're like Newman on Seinfeld.
Greedy is sort of like a value judgment, and in capitalism, there is no greed. Is a concept that doesn't compute. It is simply an opportunity for them to price their services at a market rate, and what rate is accepted? A shit ton higher than what is affordable for people sending back $10 payments.
Well, but this then makes it so the legacy entities out there, the banks, financial institutions, this is why they don't want to get involved then, because there's no set standard.
Yeah, that's part of the reason. I mean, I'm, as you know, I'm all in crypto. I love it. I think it has so many applications for so many things we do in this world. But I can understand why, if you're an incumbent, and that just means, if you're an existing business, you're regulated, you deal with what we call fiat, which is traditional paper money. There's a lot of reasons why adopting a cryptocurrency, it's no small feat. And so when do you do it? You do it like Opskins did it. We didn't abandon taking euros and yen and US dollars. What we said was, we'll still take those. But there was about 40% of the world who we could not really transact with because we didn't have the user identification. We couldn't get enough information about them.
Russia.
We did transact with Russia. Russia was fine, but there were other parts of the world we couldn't. And so with Bitcoin, we could say, hey, we don't have a payment mechanism for, a particular country. We don't have one in your currency. But guys, if you send us Bitcoin, you can work with us. And
did you see a spike in your traffic?
Of course.
Yeah.
Of course, it was transformative to our business.
So if a business is listening and they go, you know what, let's start maybe accepting Bitcoin as another payment form. What kind of roadblocks and hurdles do they have to go over to start doing that?
What they would need to say is, first and foremost, what problem do we think a cryptocurrency and Ethereum and Bitcoin is going to solve? That's where they should start.
More clients, more customers.
But that's too abstract. More customers where? Hey, we would really like to take Chinese customers, but we don't have Alipay or WePay, right? Which is what all the Chinese consumers want. And let's just say, making it up, they don't think they're ever going to have those payment options on their US site. Well, then Bitcoin would be terrific because you don't need to have those payment options. But it has to be tailored. It's like any other thing you do in business. Why am I doing it? Why am I opening up a new office? Well, hopefully because you have people you need to hire, you have customers who want to visit. You don't just open up an office.
You're saying it's much more complex as a
process.
Okay.
Yeah, it's much more complex. What's great about Bitcoin, though, and I always use this word, the thing about cryptocurrencies is, there's these transformative aspects of them. And we know about the immutability, meaning if you send me a Bitcoin, you can never get it back unless I permit it.
I understand.
Right? Unlike if you send me PayPal and then you go call PayPal, I want to charge back, right? Or you reverse your credit card, whatever it is, which I know you tend to do a bunch.
Constantly.
Right. So unlike...
On that jacket, I would have done it.
Yes, you would have. Unlike most or almost any other payment method, you can't reverse the Bitcoin charges, and most crypto charges. That's terrific. What else can't you do? Well, you can't block people from using it. So there's a word we use, it's called permissionless. So our network is permissionless, meaning anybody can do it, which is why it's such a terrific thing. Not anybody can go and get a credit card processing capability. They need somebody's permission. You don't need permission to open up an e-commerce site and say, pay me, but you got to pay me in Bitcoin. That's unbelievable. You've never been able to take a digital payment and then say, oh, I don't have to ask anyone's permission. Permissionless is an incredibly important aspect of cryptocurrencies.
William Quigley is hanging out. Ken Rutkowski, this is Coin DMZ. I know you're a great storyteller. Can we talk about the drama that has taken place in a positive way, in some ways, with Mt. Gox? It's an amazing, come on.
Yeah, it is amazing. And you know what's funny about Mt. Gox? Mt. Gox, by the way, was call it the Coinbase, the Kraken,
it was one of the first.
Bittrex of exchanges. It was the first crypto exchange. If there was another one, I didn't know about it. It was the first Bitcoin exchange. And it's got so many weird aspects. By the way, it imploded because there was a hack. And by the way, have we heard this before? Yeah, hacks happen all the time, right? Especially back then. But imagine when you were, if you started it, and a guy named Mark Karpelès started it. He was a Frenchman who decided to start a blockchain trading site in Tokyo, which in itself to me was a very odd thing.
Well, because Bitcoin or crypto is accepted out there.
Well, but back then it wasn't.
Right, because it was so brand new.
No one knew anything. So it's a story in itself.
But so many people put so much money into it.
Why Tokyo? But that's a whole different story. It turns out in this story, which we'll never have time to talk about here, Tokyo was the most important place he could ever have picked in the entire world. If you had to pick one place and if you knew what was going to happen to Mt. Gox, and all you knew was that, and somebody said, where should I base it? There would be no place better in the universe than Tokyo.
So he was incredibly fortunate.
I like to say incredibly fortunate because, yeah, to have thought through what was going to happen.
So Mt. Gox completely collapsed.
Yes.
How much was lost?
Of course, like anything when it comes to cryptos, you got to say at what point in time because the price kept going up.
Could we have a current number of what would have been lost?
I mean, it would be I think it was 400 million
then,
when it was trading at like $400.
Right.
So that go like
10x,
more than 10x, 12x. So you're talking $5 billion.
$5 to $6 billion.
No one arrested. No one. And to be clear, what happened was Mt. Gox was everyone in the world traded on Mt. Gox, and they would pay you out in cash, whatever. The problem occurred when they started realizing they didn't have everybody's coins. And they didn't even know when they were lost, because it's easy to poke fun at Mt. Gox now, of course, because now we know how you set up an exchange and the books and all that, but they had no records, they had no anything. Mark Karpelès began kind of trading, the trading concept with Magic the Gathering cards, right? So he was just a guy who traded these things, which were also valuable, but, nothing like cryptos.
Mark wanted to be a good guy. Right.
I have no idea.
Well,
I truly have no idea.
everything was lost, but Mark wanted to pay people back.
He certainly said he wanted to pay people back. What happened was it's the classic kind of run on the bank. So as people started to realize that, hey, they're missing some tokens, and most people back then would keep their tokens on the exchanges. A no-no, by the way. You don't keep your tokens on exchanges. Keep them in your wallet or in paper, because you don't know what's going to happen to the exchange. But most people kept them on the exchange, and so it started to take longer and longer to cash out your tokens, right? Because a lot were missing, so he had to wait, kind of like a Ponzi scheme, until more came in, right? And then what you started to see was the price that somebody would sell you their Bitcoin on Mt. Gox versus off Mt. Gox, there started to become a big difference in the price, right? Because it was sort of flip a coin, are you ever going to get your tokens on Mt. Gox?
But everything was lost, like I said. He now has come clean to start paying people back what they lost 3 years ago.
Yeah, so I've been following it, of course. I actually own, with some other people, I own mountgox.com, or I own the entity that was Mt. Gox. But of course it has no assets. So yeah, I think Karpeles will probably try to, with the rise in Bitcoin, try to give some kind of payments back to people. But I don't know, it's not clear to me when or how.
All I know, he's walking around with about $800 million now.
That is a claim that some of the tokens that he made as his profit for running the exchange are worth about 800 million. Yeah, I mean, it's crazy when you think about that.
For a company that failed.
Yeah.
And he was ruined. He thought he was ruined at that point in time.
Yes.
Coming back as a almost billionaire.
Well, yeah, it'll be quite fascinating to see if he can reintroduce himself into the Bitcoin community. And there's a possibility, because he was a hated guy when it went down. I mean, he had to worry about his life. And now, the vast majority of people in the industry probably don't even know what Mt. Gox was.
Not anymore. It's too
It's
far.
a historical artifact.
It's like your jacket.
Yeah, but this is coming back.
I don't know when.
Just like Mt. Gox.
We were talking about the idea of, last week, Ethereum, and I made a statement and you jumped all over me. It's been kind of flat. Kind of flat. And you go, oh yeah, because last year it was 80 cents and now it's $310, whatever. Kind of flat. But it is kind of like that nice pace to where it's almost like if I want to diversify, it's a good coin to diversify into.
I actually like using it when you're in your house and you need a level to make sure something's perfectly flat.
Ethereum.
Just get the trading range of Ethereum.
Let's look at what we got today, because I know that you follow everything and you get frustrated because everyone asks you to forecast what's going to happen.
Right.
And you're not right.
But I do know the right answer, but I just can't tell them.
No, you don't know the right answer. That's what's
so
funny.
I don't know the right answer.
But you hedge yourself properly to know if something does change, you don't stress out. You don't go, oh my gosh.
Right, so let's give a simple example that will help the audience.
Go ahead.
So you got Bitcoin, right, which is the granddaddy, and you got Bitcoin Cash, which was a child birthed from Bitcoin.
Which is 3 times more than Bitcoin now.
What is 3 times more than Bitcoin?
Bitcoin Cash is 3 times more as in cost. So Bitcoin, as of right now, is about $330. Bitcoin Cash is $1,050.
No. Bitcoin's about $7,700 right now.
Oh, excuse me, I'm sorry. I'm talking
Ethereum.
I'm talking about Ethereum.
I'm
an idiot.
Yeah.
Ethereum, by the way, or Bitcoin right now is $7,700.
Yeah, but don't ever look at that. You wouldn't look at it that way. Don't look at the price.
I'm not. I'm just.
Right. So what you want to look at is the market capitalization.
Yeah, I'm an idiot for what I just said. I'm sorry.
So the market capitalization of Ethereum is about 30 billion.
Of Ethereum, yeah.
Right now, it's about 30 billion. Right. I don't look at it. Well, it's not small, and the market cap for Bitcoin Cash is about 20 billion.
Yeah.
Right. It peaked, by the way, up to like 40 billion. So always look at the market cap, not just the price, right? But here's the point I want to make about, I guess you call it a hedging strategy, but I don't think you should own Bitcoin, without owning an identical amount of Bitcoin Cash. And I say that because...
Really?
Yes, because I think of them as sort of like, they're twins in a way. They both, are from the same base platform, but they could ultimately go in different directions. Where they go, I don't know, but to me, if you think, Bitcoin Cash, fees are lower, maybe you like Roger Ver, who's really a big guy behind it, maybe just have more confidence in it than you do in Bitcoin, whatever the reason, but you're not sure. And it's not perfectly safe to say if one goes up, the other goes down, but today there seems to be some of that going on. So what you do is you own both. By the way, if they both go up, who cares?
That's right, it's good.
Right? If one goes up and it kind of sucks some of the brand or the value out of the other, you don't care. You put money in one pocket, it went to the other. Why do you care? Now, could both go down? Yeah, but that's more a function of how are you hedging your risk in the crypto space overall, right? So you can't have all your money in cryptos. That would be crazy. I would say it's equally crazy to have 0% of your money in cryptos.
Yeah, you have to diversify.
Right? So be diversified. But yeah, the package you'll hear all the time people say is some Bitcoin, some Ethereum, and then fill in the blank. And fill in the blank changes. Sometimes people say Ripple. I personally like Litecoin.
I know you like
Bitcoin
Ripple.
Cash. So, and then have some of, if you want to be really speculative, you have some of the sort of like emerging coins that look like they're doing something pretty cool and pretty small following right now. But of course, it's much easier to go from, let's say, a 5 or 10 or $100 million market cap to $1 billion. It's much easier for that 10x run than it is for a Bitcoin to add, for it to do what it needs to do. For it to go up 10x, it would need to add 900 billion of value. That's a much harder thing to do.
That's a big mountain to climb. I want to talk about the idea of marketing and branding.
Yeah.
I just want to show you a, don't say the name, but I want you to see, what's the company? Can you see what it's called? On the very top?
I can.
What is it?
You want me to say the name?
You can say it. What is it?
It says Bitcoin Indonesia.
That's right. So, and this person is the CEO of Bitcoin Indonesia.
Aren't you the CEO of Bitcoin LA?
I could be, but that in Indonesia, which by the way, Bitcoin is used
very
extensively, right?
Yeah,
50,000 merchants.
You should talk more about this, but a country like Indonesia and how it has just adopted, people there have adopted cryptocurrencies and that is like a testing lab for anyone who wants to understand, like, what are the elements that make cryptos and blockchain really interesting? Well, there's a situation in Indonesia. There's a lot of reasons why cryptocurrencies are really desirable and useful. It's where you can look at that as a place to figure out, oh, are there any parallels in other countries?
Because they feel it's an actual institution. They have Bitcoin offices they can walk into. So what they've done is they made it look like it's tangible.
And when you say they, who's they?
I just showed you his card.
So entrepreneurs in Indonesia.
They have made a place like a bank to walk in to exchange and use the rupiah, the local currency, and exchange it right there with somebody locally, and you get Bitcoin. They've made it so it's touchable, it's tangible. There's a lot to learn from that.
Well, there is, because my biggest issue with cryptocurrencies.
It's difficult.
Number one, by the way, the name cryptocurrency does not engender like a lot of like warm and fuzzies. The name itself, we need to come up with a better one. Bitcoin, pretty darn good. But when you want to talk about the currencies overall, cryptocurrencies, I'd like a better name. But the reason I focus on that is because from a consumer standpoint,
I agree.
Cryptocurrencies have a long way to go. Owning Bitcoin is hard. It's hard to acquire it for most people. It's hard to trade it. It's scary if you trade it. You send it to somewhere else. You screw up a few things. It's gone into oblivion. Bitcoin wallets are not very consumer friendly.
It's not easy, period.
Yeah, it's not easy.
So we need, you and I, after the holidays, we're going to open up our own Bitcoin shop.
And what will we sell?
We got to figure that out.
Yeah.
But we have to have lemonade there because it's like a lemonade stand. All right, so we're going to jump over a holiday, and when we come back, we'll find out what's going on. I'm going to Indonesia, and I will actually take some pictures of those Bitcoin.
I would
places.
love for you in the next episode to talk about what takeaways you have about just the groundswell of interest in Bitcoin in Indonesia.
Show you pictures. We'll all dive into it. People want to rent your jacket. Where do they go?
That's going to be hard.
Yeah, exactly.
Although you can find me at many, many Bitcoin conferences.
We're here every week. We appreciate you hanging out with us. William Quigley, Ken Rutkowski, thanks a lot for hanging out with us right here on Coin DMZ. Thanks a lot, everyone. Bye.
Thanks, everybody.